Good afternoon, guys. It's Workin bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. Actually, a wonderful weekend. We're looking at Bitcoin to the US dollars of the 4-hour chart on Coinbase. And last time we spoke, guys, Bitcoin had just broken up out of our wedge here. We were sitting at resistance there at 3,900, it looked like that was a fairly strong resistance, and then Bitcoin was able to push right above it. We were seeing some unexpected moves in the market, as I discussed with you guys a little bit yesterday, and I think I was a little bit unclear. As you guys know, for the last few videos, I've been talking about shorting between 4,000 and 4,120, doing that play, or that's the play that I was looking at, guys, and I was basing that off of if and when price breaks up here, which we were all expecting. I told you guys we were entering down here at 3,800, targeting 4,000 to get out, and then looking for a short position between 4,000 and 4,120, targeting 3,800 again. And that still may play out, guys, but the conditions that I was putting that under is as price rose up here, shorts start to get liquidated and longs start to stack. And yesterday we talked about the short stacking here as price was coming up. Instead of getting liquidated, shorts were actually stacking and longs were fairly stagnant for the most part, guys. Kind of threw me. So I got out of my position there at 3,900. Again, guys, I'm even though probability was absolutely still favoring the upside, no question, especially the fact that shorts were stacking as we were coming up here, guys. So that would tell you that the market was expecting this thing to break back down, and so oftentimes anytime you see that, guys, market makers will drive price up to liquidate shorts, and that's exactly what we've kind of seen here. The difference here is if we come over here and we look at actual shorts, shorts are remaining fairly stacked, guys. So even though we had this little bit of a liquid, we had this long wick here, guys, where we did have some shorts getting liquidated and knocked off the board here, and still a few here. Overall, shorts are remaining strong. Shorts are remaining fairly stacked, guys, and that, in my opinion, so in other words, and especially if we come over here and we look over at longs are fairly stagnant. Now, again, we had this long wick here at the exact same points where I do think a lot of people started thinking that this was it. We're breaking out. Hit that $4,000 resistance. Price came back down. I think a lot of those people got scared right out of the market. And looking over here at shorts, guys, as I said, guys, we had a lot of shorts hitting their stop losses coming back in. But for the most part, guys, shorts are holding strong. In other words, market makers, or excuse me, not market makers, scratch that. In other words, retail still believes that, or at least a good portion of retail still believes that price is going to end up breaking back down, and that might actually be the catalyst that we need for a nice little short squeeze to bring price right back up. And I'm watching this closely, guys, because we're not just seeing the typical longs fairly stagnant, short stacking, typical short squeeze. We're seeing this backed by volume. We can see the volume sitting at about 10.1 billion. That's up about 10 billion from where we were yesterday afternoon. Or excuse me, up 10 billion. Sorry, guys, that's up about 1 billion. We were at about 9.2 billion, so up about 900 million from where we were yesterday, guys. So volume is remaining fairly strong, guys, and we're entering into this very critical zone between 4,000 and 4,120. Again, that's on Coinbase. It'll vary depending on your exchange. Bitfinex is more like 4,250 to 4,300, somewhere thereabouts, guys. But nonetheless, no matter what exchange you're looking at, this pattern is exactly the same. And this is the area that on Coinbase, again, that's for the top of it sits at 4,120. This is the area that we need to see a decisive break above. Again, by decisive, I mean a daily candle, both opening and closing, not just wicking above here, and not just closing, but both opening and closing above 4,120. If and when we see that, I do think that that is going to signal at least a temporary uptrend, a confirmation of a temporary uptrend. Will it signal the bottom being in? I'm not sure, but I will certainly start putting that on the table if and when that does happen. As I said, my analysis will change if we get a daily candle, both opening and closing, above 4,120 on Coinbase. Again, that'll be above about 4,250 on Bitfinex, and I'm not going to go through every exchange, but whatever this pattern is, guys, that's the key area that we're watching here. And that's key for a number of reasons, guys, as I discussed yesterday. If we go from this breakdown, this massive breakdown, and we go swing high, swing low from the first area that structure was created, which was right here. So we look at this overall structure from that swing high to our swing low point of about 3120 on Coinbase. We can see that that's the area where that golden pocket is. I know I've shown you guys this a lot of times, but for those new viewers, this is why we're getting so much resistance in this area. This is where that golden pocket is, guys, and this is where, if we can decisively break above, again, by decisively, I mean a daily candle both opening and closing. If we can break above that area, guys, I'm going to start to get extremely, extremely bullish. All right, zooming in here, guys, here in the short term, one of the other things I'm going to be watching is this daily candle, obviously looking very, very bullish. Yesterday's candle closed just below that 3,900. Today, we're well above it. 3,900, I do believe, has to hold today. If we do close below 3,900 today, I think all bets are off and we're coming back lower. But for now, guys, this 3,900 does have to hold. We can see that 3,900 acted as a very strong support zone once it was broken above back here on February the 20th, starting on February the 20th. Then we ended up crashing below, and what happened? 3,900 acted as a very strong resistance here, 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 until we finally have broken have broken above this area here. And so this daily candle has to close above 3,900. If that daily candle, I think it opened right at 3,900, so I can accept that as an open above. Now, if we can also close above 3,900, that'll be a nice decisive break above 3,900, and that'll suggest a lot more upside in the short term. So I'm going to be watching that 3,900 very, very closely, guys. Of course, we need to break into this zone between 4,000 and 4,120 with some consolidation. If that does happen, obviously we're going to get very bullish as well. I'm also looking, as I pointed this out many times in the past, looking at this overall structure, going swing high, swing low. We had a perfect hit right here off the 618, actually twice, bouncing off the 618, and then we've continued to take off. So from a technical point of view, as I told you guys, we're seeing a lot of volume in the market, and as we see more volume, we're seeing the market show a lot more structure as we're seeing it here. And in fact, it's not just this overall structure here, we're also seeing it with the microstructure. If I kind of zoom in here and use this as my swing low, and I go swing low, swing high of our, this would be our first wave here. We come down, and again, a perfect hit, perfect technical hit right there off that 618 fib level, and then and then it's taken off. And personally, guys, again, you guys know I don't like Elliott wave and low volume markets. And even though we are seeing the market uptick here, guys, we are seeing some nice increase in volume. Overall, this is still a low volume market. That being said, looking at this as a 1, 2, 3, 4, and 5. If I am forced to do Elliott wave, I know I keep getting a lot of direct messages from you guys, a lot of private messages from you guys asking me to do this, so I'm going to go ahead and entertain that. And we are seeing some structure, so it's not a bad idea to start looking at it. So if I'm looking at this as my 5-wave structure up, and I look at this ABC correction, the ABC correction is very interesting. If this count is correct, we would be looking at something like an A, B, you can see the little wick here, and a C. Now, what's significant about that C? Obviously, the C did not come below the A. And we're also, and that would be typical. If we had this very, very high corrective B wave here, and we had this kind of this flat where the B came up and then the C came out, we could call that a running flat. We don't have that now. We had the B wave correcting up to, right around that 3,900 zone, and then we corrected right back down. But if in fact this turns out to be the case, guys, and we are starting off excuse me, and we are starting off a new wave, a new set of a new 5-wave structure up. The fact that this C wave closed above this A wave, even though it's rare, it is, if this ends up pulling out, this is a good sign of a bullish market. In other words, this is a very, very bullish sign if that count ends up being correct. So we'd be looking at something like, if that is in fact the case, we'd be looking at something like we already had our, excuse me, guys, we've already had our wave 1 coming down for our wave 2, and we'd be coming up for the 3 now. So where is that 3 going to hit? And it's also very interesting, as I show you guys, if we come over here, and if this, assuming this is our wave 1, and we go swing low, swing high to the top of that wave 1, where did that hit? Look, as I said, right there off that 618. So again, they're seeing a lot of structure in the market. So if this is in fact the case, where is that sub wave 3? Where's the target of that sub wave 3? If we pull our fib extension out, we can see on any third wave, you typically are going to target the 1618 fib level. So we'd be looking at somewhere above 4200, 4210, somewhere there about for the target of that wave 3, and that's going to bring us nicely above our 4120. Now again, we need to see it close above there, not just wick up there, but actually close above there. So we'll wait and see if that pans out. But right now, guys, you can certainly make a very, very bullish case for price breaking above this very, 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 very strong resistance here. And I don't want to, again, guys, I'm very cautious in telling you this because this is an extremely strong resistance, guys. We came down, it acted as support here, support, finally broke down, acted as resistance, then broke back up, support, support, broke back down, and it's just been resistance ever since December, early December, guys. A very, very strong resistance. So it's going to take a lot to break up above this zone. And even if we do break above this zone, guys, that doesn't mean that the bull market has started and the bear market is over. That just means we might be, let me zoom out here to the weekly chart so you guys can see a little bit better. What we might be looking at is something like this. So if this thing does in fact break up, there is still a whole lot of area to get through. If we go swing high from this area that it broke down to our swing low here, we can see where are we finding so much resistance? Right there at that very first fib level at the 236. So there's still we've still got the 3.2, the 0.5, and then the all-important 618 fib level, which just so happens to coincide perfectly with this weekly candle's bottom here, as well as the support that it was acting at all the way back here in 2017. So we can see that that was acting as strong support all the way back here. You can see the candles wicked down into it here and created a what should have been a very, very strong demand zone, and it just bounced off that demand zone. What was, and it had been bouncing off that demand zone for all of 2018 before finally breaking down. So what was support should act as a very strong resistance on the way back up. So I can see a scenario to where even if the lid gets blown off here, we do find a lot of resistance around that 5,000 to 5,200, and certainly if and when we do start to take off, once we get into this $6,000 range, guys, there will likely be a lot of resistance there as well. That being said, this is Bitcoin. So if FOMO takes over and volume floods the market, guys, the lid could get blown off this thing in a second. But until that does happen, guys, we've got to look at the chart, and the chart says there's still a long ways to go. And so I would be very, very careful. This is still a very bearish trend. I'd be very, very careful of any major move up. In other words, I would take profits along the way until we very clearly risen above our $6,000 point. I would be very cautious and make sure you're taking profits. Don't make the same mistakes that so many people made back here in all through 2018, where every major move up, they thought that was it. It's heading up, and then it just ended up crashing right back down. Don't do that, guys. It may be it. This may be bottom. This may be the perfect time to go all in, but do you really want to risk that? Now, I do believe we're getting to a very critical point here, guys, and if we look here at the weekly chart, you can almost just see it. We come over here, we just draw our trend line here. What are we coming up at? We're coming up to this critical point, guys, where price is very likely going to hit that trend line. And where is that? Where does this, just coincidentally, where does this trend line just happen to lie at the moment? Right there at our very, very strong resistance between 4,000 and 4120. It's just sitting literally right there at this point. If it was to go straight up, it would hit it at about 4150. So, and then we can see that we wicked up into almost 4150 numerous times here in the past here, a little above actually, and then it got rejected very strongly. So again, guys, until we do break decisively above that zone between 4,000 and 4120, a decisive break above until we get the daily candle opening and closing, guys, just remember that the trend is still in play. Now, again, if we can break above that, we can break this trend, guys, and close above that, a decisive break above, things could get very bullish very quickly. As I said, we've got a lot of volume backing things up right now. So I could see a major move coming in either direction very, very soon. Right now, I'm leaning bullish. I'm leaning for price to rise up to possibly around that 5,500 area, somewhere thereabouts over time, not right away, guys, over the next few months. But we'll have to wait and see kind of how this ends up playing out. And never forget, guys, I've shown you guys this before, never forget that we do still have this hidden bearish divergence on the weekly chart that has not been cleared yet. Doesn't mean it has to come to fruition, but it has been a very strong warning sign many, many, many times in the past, guys. So this is very, very clear. Hidden bearish divergence would suggest a breakdown at some point. Doesn't mean it can't break up here in the short term, but it would suggest a strong, hard breakdown here at some point. Now, again, doesn't mean that has to happen, but it's there. It's on the chart. The trend is still bearish. So just, again, be very, very, very careful. All right, so how am I playing this? How am I trading this? As I told you guys, this is the area between 4,000 and 4120. I was looking to short. I did not open a short position because I also told you that I had to have it. Once we got into this area, I needed to see I needed to see shorts falling off the board being liquidated and longs stacking, and we're not seeing that. In fact, we're seeing the opposite of that. We're seeing shorts continue to be stacked, while longs are slowly, well, let's see, bring them up here so we can get the exact. Longs are, slight little uptick, but for the most part, basically remaining flat for the most part. So again, guys, we're not meeting that criteria for short, and we're also seeing us hitting this area with I'm going to go ahead and refresh the volume here. Yeah, with volume sitting, well, it just dropped below 10 billion, but still with volume relatively strong compared to what it has been. So no, I'm not shorting this area yet. That might prove to be wrong, but hey, I don't mind being wrong. I'm protecting my capital, guys. I wanted to hit this area. My plan was to short between 4,000 and 4,120. If shorts were falling on the board, longs were stacking, and volume was lackluster. We are not getting that. Shorts are still stacked, longs are not stacking, and volume is still good. That is a nice setup for price to break up above our 4120. Doesn't mean that has to happen. In fact, even though I am leaning bullish here, because I think that FOMO could set in and the lid could pop off this thing at any moment. Doesn't mean that would be a bottom, but it could certainly spark a temporary bull run here. But so I'm sitting on my hands at this point, guys. I'm out except for my long-term holds. I'm not. I'm going to wait and see if we can break above 4120 decisively. If that happens, of course, I'll reevaluate at that point. Or if this thing does end up crashing below, and if we do crash below 3,900 decisively, at that point, I'm going to start to get very bearish. But right now, I'm sitting on my hands. I'm remaining neutral, guys. Again, I do think probability still favors price to break down here, but not to the point to where I'm willing to short, because I'm not. Even though I think probability still favors the trend, it always does favor the trend, my gut is telling me there's a very good chance the lid could get blown off of this based on what I'm seeing with long, shorts, volumes, and the whole setup as I just explained. So I'm going to go ahead and wrap things there, guys. Actually, quickly, I know some of you guys always want me to go over these moving averages, exponential moving averages here. So let me just quickly cover that here. Looking at the daily chart, guys, I showed you guys yesterday that the Bollinger Bands were bottlenecking, and that was a very good indication that price was going to move. And of course, it did. We saw price move here. We're hitting the top of the Bollinger Bands now, finding some resistance there. We'll see if that does hold, but it's still things looking rather bullish. We can see that the moving averages and exponential moving averages, looking at our EMAs, particularly the 8, 21, and 55-day EMA, all in a bullish posture. We have the 8 on top of the 21, 21 on top of the 55. That is a very, very bullish posture, and that is also why we're finding so much support here and have found so much support here over the last few weeks above that 21-day EMA. So very, very bullish looking posture, guys. The 50-day moving average still sitting down here ready to act as support if we do have a nice crash below. And of course, what everybody is watching is the 200-day moving average up here, currently sitting at about 4,800. And we'll have to wait and see. Of course, if and when price does hit that zone, that is sitting up there ready to act as a very strong resistance. And of course, a break above that would be extremely, extremely bullish. And of course, everybody's waiting for the day we get that 50-day moving average crossing above that 200-day moving average. Nowhere near there yet, guys, but certainly keeping an eye on it. For now, though, things looking very, very bullish on the daily. I'm going to go ahead and wrap things there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Until next time, guys, please trade safe. Take care of yourselves. This is Workin. Signing out.